It's the very beginning of the opening of the door for IPOs. I think it's exciting. It's what institutional investors, endowments, foundations, sovereign wealth funds, those firms that feed capital into the venture community, it's what they want and what they need, and it's a natural part of the cycle. And so it's really exciting that those doors are opening back up again.
Well, that was Light Street Capital founder Glenn Kacher on Halftime with me earlier today, speaking on the resurgence of the IPO market with ARM, Instacart, Klaviyo making their debuts over the past week. All three names, though, trading near their IPO prices. Joining me now to discuss all of this, Toney, Plexo Capital. It's good to see you out here on your coast.
Exactly.
So Kacher says that, the doors are opening. Are they truly?
I think we're starting to see them open. I think what's going to end up happening is people are going to really analyze these three different companies. They actually have dramatically different business models and sizes, which is a good thing because it gives us a chance to kind of take a step back and digest this new information and look at the performance.
Speaking of, what do you make of the performance? I mean, it's not great. The first day pops have been pretty nice, but afterwards, not so much. What's up with that?
Not so much. I think when we look at these three, and I'm going to exclude Klaviyo for the moment, but when we look at ARM and Instacart, I think there's some challenges there. We're just not seeing the same level of growth. I think ARM is priced a little bit close to perfection right now, given where its revenue growth is. I mean, look, it's going to trade, I don't know, where is it, like 147, 150 PE multiple versus looking at NVIDIA, right, about 100. So it's priced at a premium with not the same level of growth as NVIDIA. And I would say, looking at Instacart, I think the optics look good. It's a profitable gig economy company. However, if we peel back the onion a little bit and kind of see where some of that growth is coming from, probably almost a third of the revenue for Instacart is actually coming from advertising, not actually from its core business. And that those advertising dollars, we know those are higher margin, right? And that's actually where we're seeing a lot of what's driving the growth for Instacart.
Speaking of growth, I mean, you make a good point about the maturity of these companies, ARM and Insta, for example. They went public as pretty mature companies. That's what you're alluding to when you talk about, what level of growth can they attain from here?
Yeah, that's right.
The growth rate.
That's right. And look, these are why historically people are attracted as investors to IPOs, is they're looking for those companies that can be these next, magnificent 7 big tech companies that can both provide the growth at a sustainable level over a long period of time. And so I think that's why we're seeing some questions. Now, all that said, I think going back to the clip that we just played, yes, we are seeing at least that good companies will be able to get to the public markets, but we need to be cautious.